The TSX trading in record territory once again. Let's get more from Chhad Aul, Chief Investment Officer and Head of Multi-Asset Solutions at SLGI Asset Management. Thanks very much indeed for joining us.
Great to be here.
When you look at the TSX composite, you see it at record highs. Do you think, well, maybe I should be lightening up on some of my equities?
Yeah, I mean, Canada, from an equity market perspective, really right at the top of the league tables when we look at different equity markets around the world, and you're benefiting from a great run in the gold stocks, particularly catching up over the last couple of months. Our banks have done phenomenally well. Healthy allocation to Canada has proven itself in a portfolio, some different exposures than you get from other markets. But at this point, certainly we think it makes some sense. Parlay some of those gains into other markets that have lagged so far this year. We're definitely interested in adding a little bit more to the U.S. equity market. We think with the narrative shifting towards perhaps a more accommodative Fed, the U.S. market is likely the one that will benefit the most over the remainder of this year.
Would you be, let's put up the TSX Banks Index. It's been hitting records. Are you tempted at all to go slightly underweight banks, Canadian banks?
I mean, it's more about, I think, taking some of the profits that you may have gained over the last little while. And, the business has worked well. Like the Canadian banks, they manage expenses well. And then they've got some headwinds with, some tailwinds, with steepening yield curve that, again, helping their net interest margins, et cetera. Able to, maybe the worst concerns around the Canadian economy behind us as well. But I think, again, some of the better opportunities we see might be for a little bit more of a catch up in the U.S. market. And certainly we're entering a period where, historically, this is the time of year where we see some volatility over the next couple of weeks. And as we work our way through that, we think there might be a good opportunity to make that reallocation towards, south of the border and look for a little bit of a catch up over the rest of the year.
And the old steepening yield curve, short rates have been dropping, and banks tend to take deposits at short rates, but they lend at long rates.
That's exactly right. And I mean, long rates have been a little bit anchored higher. And, there's been a lot of volatility, actually, in long rates. As we sit in this kind of uncertain period, let's say, for the economy, we're seeing labor markets slow. We see some data from that even today. And, of course, we're all waiting on the big numbers, both for the U.S. and Canada tomorrow on the labor market. But for now, we think that, this is kind of a healthy slowing from a labor market perspective, kind of what we were I would say policymakers were hoping to see back when they were hiking rates. So as long as it doesn't fall out of bed and the economy remains relatively strong, we do think that it opens up space for the Fed, who's been on hold for longer than other central banks, to begin to cut a little bit more. And again, I think that's going to benefit markets south of the border.
For the rest of 2025, are there asset classes that you're overweighting?
Certainly, I think within U.S. equity markets in particular, there's certain sectors that we like. So again, entering this seasonally weak period of time, we know September through to early October, we do like some more defensive sectors as a good way to stay invested. Staples, healthcare, again, rate sensitives with this idea of lower rates like real estate play well. And we continue to like precious metals, whether you're investing directly in gold or in the gold sector. And the material sector more broadly, again, some of the areas that we favor.
What's the attraction of gold right now?
I mean, gold is really just working on multiple levels, right? So earlier in the year, the idea of some divestment away from U.S. assets, a weaker U.S. dollar has benefited gold. Concerns around, policy and how even challenges to the U.S. Fed's independence has been a benefit for gold as an alternative asset, as an alternative currency to the U.S. dollar. So really a number of factors have been quite positive for gold. And again, investors are waking up to this fact and, kind of catching it up in the gold stocks as well. I think we'll see that allocation continue as gold finds its place in more and more portfolios.
Let's maybe put up a 5-year chart for XBM, so TSX listed ETF that tracks base metal stocks. Right. Are you broadly in favor of an asset like that? I mean,
base metals probably don't have quite the same sort of defensive characteristics like the precious metals do. Much more play on where we are in the economy, right? So as you see, much more range bound in the base metal space. There's been a lot of kind of headline around tariffs around copper, et cetera. So getting sucked into that narrative to a certain degree. So we would play base metals a little bit more on a recovering economy, right? So that's where we would see looking for more torque to those base metals, as opposed to precious metals kind of really fit the narratives around where we are in the economy right now, as well as the potential risks that are out there as well.
Let's throw up NVIDIA. I know the inevitable question: are you tempted to buy more NVIDIA, but partly on the momentum thesis?
I mean, the idea of let's call it the AI hyperscalers, even more broadly. I do think they've had periods of weakness, but again, not sitting too far from their all-time highs at the same time. I do think valuations are certainly a concern, and if there is going to be some steam let out of the market in the next couple of weeks, as seasonally we've seen, perhaps you're going to see a little bit more taken out of these AI stocks. But that could be a really good opportunity to get back in if you do see that, because I do think that one thing that will play out, as long as valuations are not super extended, if we do see bouts of economic uncertainty, concerns that the economy is slowing a little bit too fast, I said some of these AI stocks are really going to take on those defensive characteristics, given that it's a theme that's kind of, it goes beyond the cycle, right? This is a theme that's going to play out and go beyond just the economic cycle. So I do think that the AI stocks will take on some defensive characteristics.
Do you find, I find when I do searches now, I just AI it. I don't even bother with regular Google search.
Exactly. I mean, everybody's workflows, whether for personal work, et cetera, are dramatically changing, and how all of that shakes out, into individual stocks, into the broader economy. Still a lot to be seen there, right? So again, some of those themes, like we said, will not be too sensitive to where we are in the economic cycle, right? This is going to be broadly living above that fray.
I wonder, though, are we headed to something of a nightmare for consumers? I mean, it's hard enough to deal with many companies these days. You have to press button 1 and 3. But now we can't get a person, maybe, in some cases.
And you might not know you're not talking to,
that's true.
to a person
no,
as
that's
well.
Quite true.
Right? I mean, I think at the end of the day, companies are, though, trying to maximize how they service their customers. There's going to be winners and losers.
Money,
yeah,
people.
Exactly. But again, it's all about efficiency. We think about this from an investor perspective. There are going to be certainly winners and losers in how they apply AI to their businesses, and that's really the AI 2.0 trade. Like right now, it's mostly been about the infrastructure, like the hyperscalers that we talked about. Phase 2 is really every company across different businesses is looking to enhance their business with AI applications. Who are the winners? Who are the losers? That's really where the opportunities are going to be over the coming quarters and years.
Chhad, thank you very much. Chhad Aul, Chief Investment Officer and Head of Multi-Asset Solutions at SLGI Asset Management.